It's better to give than to receive. We've all heard the phrase. But as a bonus, the US tax code allows us to receive when we give in the form of tax deductions that can lower your tax bill. And today, we're going over everything you need to know about deductible donations. We'll be covering what types of donations are eligible, how to claim your deduction, if it even makes sense for you to donate for tax purposes, and everything in between. Note that for guidance or advice specific to your situation, you should consult with your tax or legal professional. Before we get started, go ahead and like this video right now to let me know you're pumped. And as a bonus, it helps others find our channel on YouTube. And subscribe to see more videos that will help you save on your taxes. Let's start with what organizations are eligible for deductions. Only donations that go to a tax-exempt organization or qualified organizations qualify for tax deductions. So, friends and family, unfortunately, do not qualify for a tax deductible donation. But Section 501c3 of the IRS rules clarifies this in detail. And examples of qualified entities include religious organizations, charities like Goodwill and the Salvation Army, nonprofit schools and hospitals, and fire departments, and public parks, to name a few. Most, but not all, charitable organizations qualify for a charitable contribution deduction. And if you're not sure if the organization you want to donate to is tax exempt, the IRS has an easy to use tax exempt search tool that can help you verify the status. Now, let's go over what kind of goods are donatable for a deduction. In general, cash contributions, as well as items donated, are tax deductible. Common non-cash donations tend to be things like clothing and household items like furniture, but other everyday items such as laptops, cars, and even houses can also be donated. But pay attention to the items you give. The IRS only permits deductions for clothing and household donations that are in good use condition or better. Note that the rules for non-cash donations are a bit more strict, but we'll go over those later in the video. One tax deduction that's often overlooked is tax deductions for volunteering. When you volunteer, your time is not deductible, but non-personal living or family-related expenses are. Think mileage to and from volunteer locations. Okay, let's transition into donation limits and values. While you are free to donate until you drop, Uncle Sam puts a cap on how much of a deduction you can take per tax year based on donations. In general, you cannot exceed 60% of your adjusted gross income, and in some cases, limits of 20, 30, or 50% may apply to contributions to specific private funds and veteran organizations, to name a few. If your contributions exceed the limit, you can generally carry over the excess over the next 5 years. For the 2020 tax year though, the CARES Act eliminated the 60% limit for cash donations to public charities. And you can deduct up to $300 even if you take the standard deduction. Note that some donations, such as donations where you receive at least a partial economic benefit, don't get 100% credit. An example of this would be buying a coffee mug or charity dinner to support a cause. Only what you contributed in excess of the value of the item is deductible. Here's an example. If you donated $50 and the value of the coffee mug you received is $30, then the deductible amount for the mug is only $20. Also, be aware that for non-cash items, you must claim the fair market value of the item and not what it's worth to you. Okay, so how do you claim a tax deductible donation? To claim a tax deductible donation, you will have to itemize on your tax return by filing Schedule A of IRS Form 1040 or 1040 SR. If you're not familiar with itemizing, there are two ways you can take deductions on your federal income tax return. You can itemize deductions, meaning list out every single deduction you want to take, or use the standard deduction, a set amount of deductions provided to most taxpayers. But does it even make sense to itemize in the first place? Itemizing can take a lot more time than taking a standard deduction, but the decision ultimately depends on which deduction type provides the greatest reduction in your taxes. A tax professional like the team here at Life Accounting will be able to help you decide what is best for your situation. In general, you should itemize deductions if your allowable itemized deductions are greater than your standard deduction, or if you must itemize deductions because you can't use the standard deduction. Most taxpayers will be better off simply taking a standard deduction of $12,400 for single filers or $24,800 for married couples filing jointly, as a standard deduction will provide them with the least amount of tax liability. Here are the standard deductions based on your filing status as a reminder. If you do decide that itemizing is best for you, here are a few extra things to remember. First, contributions are deductible in the year it's paid. A check in the mail to the charity or a charge to your credit card constitutes payment, even if the payment is made in a later year. Second, you will need to keep very good records related to contributions to verify that you gave. No matter the value, be sure to keep up with receipts, bank statements, canceled checks, or written acknowledgments, not only for your own records, but in case you were to get audited by the IRS. Lastly, keep up with any carry forwards that you have made. Remember, any contributions that exceed the limit can generally be carried over for the next 5 years. You want to make sure they are used before they expire. Well, there you have it. Everything you need to know about tax deductible donations. As a recap, here are a few key takeaways you need to remember. First, only donations that go to tax-exempt organizations or qualified organizations qualify for a tax deduction. In general, cash contributions, as well as items donated, are tax deductible, but don't forget tax deductions for volunteering. In general, you cannot exceed 60% of your adjusted gross income, but for the 2020 tax year, the CARES Act eliminated the 60% limit for cash donations to public charities, and you can deduct up to $300 even if you take the standard deduction. For donations where you receive at least partial economic benefit, only what you contribute in excess of the value of the item is deductible. Fifth, to claim tax deductible donations, you will have to itemize on your tax return by filing Schedule A of IRS Form 1040 or 1040 SR. Sixth, you should itemize only if itemizing provides the greatest reduction in your taxes. Lastly, if you do decide to itemize, be sure to keep up with donation records in case of an audit. Hey, if you found this video helpful even a little bit, go ahead and smash that like button for me and subscribe today if you want to see more videos that can help you save on taxes. I'm Karan from Life Accounting. Until next time.